Hey guys, how's it going? It's Andy from Magoo Investing. Happy Tuesday. In my stock portfolio breakdown video from this past week, I talked about how Southwest has kind of snuck up on being the largest position that I have in my overall portfolio. And based off of the way that I feel about the overall stock market and where I want to be kind of pushing my funds towards the second half of 2021, it doesn't really align with my goals. And so I decided that I might as well put my money where my mouth was, because for the past couple months, I've been talking about General Electric stock, ticker symbol GE, as being my favorite stock to buy overall for 2021, not only as a recovery play, but also as a renewable energy play. And since in the month of April, we're going to be talking about pretty much exclusively renewable energy and green energy stocks during the week, I thought it was only fitting to talk about why I really love General Electric stock overall as a clean energy play, and why I've decided to double my overall position to make sure that it will stay as my number one largest position that I currently own. And so in today's video, also there's a gnat that's flying around that I swear was not here when I set up yesterday. There were some birds chirping in the background that I wasn't expecting, and now I got a gnat flying everywhere. But in this video, we're going to be breaking it down into three different parts as always. Part one, we're going to be talking about why I'm so bullish on GE overall for the renewable aspect of their business. People have kind of criticized me in the past for considering GE to be my favorite renewable energy play when they say, oh, it's not as reliant on renewables. The whole idea is that this is a growth opportunity, and that's why I'm so bullish overall, and I'm going to give some reasons why and the numbers from the recent earnings report and some information they gave back in March that makes me feel extremely bullish going forward. Then part two, we're going to talk about the recent news that came from that investor day that made the stock fall around 10% over the course of like 2 days, and then it got bought back, and it's actually higher than it was during that actual investor day. And then part three, we're going to talk about the history of the stock, because one of the biggest things that people point out when I talk about GE as being my favorite stock to buy overall for 2021 is, oh, this company's in a horrible spot. There's a reason why it's so cheap. We're going to talk about the reason why it's fallen so much and why I'm not as worried about that as a long-term investor now, because my whole thing is I want to see change in overall company that has struggled in the past. And I really believe that we've seen GE take steps to move itself in the right direction, so we'll talk about that. Also, just a reminder, this is not financial advice, and if you've been enjoying these videos, I really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. So currently GE is trading for $13.50, and it's up 25% on the year, which is beating the overall stock market by a pretty significant margin. GE currently has a 5-year beta of 1.09, so it's not as volatile as some of the other stocks we're going to be talking about for the renewable sector in some upcoming videos. So part one of this video, we're going to talk about why I'm extremely bullish on the company on the renewable aspect of the business. Most of the info from this section is going to be coming from their 2021 Investor Day, because it gives them a lot of outlook on how the company is feeling for the next year and even going into 2022. So the stock fell, as I mentioned, because they discussed a stock split. We'll talk about that in a little bit. But renewables hasn't been the most important part of GE overall. When I show the breakdown of the revenue sources over their past 3 years, renewable is currently in 4th out of 5th place, behind power, aviation, and healthcare. But there's a reason why I'm so bullish on it overall, because while it's not the most important right now, I think this is a huge growth opportunity for the company going forward. And so here's what their outlook for renewables for 2021 and 2022 compared to the numbers that they had in 2020. And some of the things that really stuck out to me is that they expect to execute backlogs of offshore wind with positive margins, with the goal to reduce their fixed costs overall. And so when I look at a company that's trying to expand their market, I want to see reduced costs, because the whole idea of investing in renewables is, yes, you're going to have a lot of upfront costs to get the technology and the ability to actually implement. For GE's case, it's going to be a lot of wind turbines. So there's a lot of upfront costs to get the projects going. Then you're going to be getting a lot of recurring revenue from the services part that go into the upkeep of these different technology. And the idea is that this is going to better their segment margins in 2021, and it's expected to have positive margins in 2022. So as of right now, it's not a very profitable part of their business. It's actually not profitable at all. But the idea is that by 2022, the margins are going to get better to the point where it's actually becoming profitable. And for their free cash flow, after having negative $600 million in 2020, they're expected to be positive in 2021 and increase that number going into 2022. Looking at the offshore wind forecast in gigawatts, it's expected to grow at a compound annual growth rate of 20% in the next 10 years. And GE is in a great spot to take advantage of that, because they are the leader when it comes to offshore wind. And so whenever I talk about investing in a space that maybe you don't have a lot of experience with, or something that you not really sure which company to pick, I always like buying the largest, because I think it gives enough stability to feel confident with your investment overall. And so when I look at the wind plays when it comes to offshore and onshore wind turbines, GE I think is in the best spot going forward. But looking at 2021, the exciting part is that they expect their free cash flow for renewables to be positive for the first time. And so that's a step in the right direction, and I'm sure if that actually happens, it will be a huge boost to the outlook of the company going forward. Part two, let's talk about some of the recent news, because as you would expect, the pandemic has definitely hurt GE, especially when it comes to healthcare and aviation. From aviation, this is their largest and most profitable part of their business. And here's how they're predicting 2021 will look with aviation. Things will be hopefully better across the board. They're not going to be fully back to the pre-pandemic levels, but the expectations are by 2022, things will get pretty much back to normal. Looking at their product life cycles, they have a long time of service revenue going forward. And with the recent ungroundings of the 737 MAX planes, which Boeing has contracted out for GE to make those engines, will allow them to have recurring revenue for the next 20 years when it comes to these overall engines. And so they expect 2021 to see a recovery for healthcare as hospitals start to invest in equipment after the pandemic has stopped. We've talked a lot about a lot of the healthcare companies have really had to struggle when it comes to, healthcare companies investing in equipment, because a lot of procedures that aren't really time sensitive have been pushed back. So the expectations are after the pandemic finally goes away, there's going to be a lot more investment toward the healthcare parts that GE would benefit from. The biggest news besides the stock split was that the company decided to sell off their aviation leasing business for $30 billion, and that money is expected to pay down a lot of the long-term debt that they've been accruing over the past decade plus. And they're still going to be getting a 46% stake in the company. So I'm not super worried about this, and I actually thought this was fantastic news. I talked about it a couple weeks ago when this news originally came out. Then you have the stock split, which is actually the first time that I've voted no on a shareholder vote, just because I don't like the idea of a stock split, especially as a smaller investor. The ability to sell cash secured puts or covered calls is extremely attractive to my long-term investment strategy. And so if they do decide to increase the share price, I think it's by 8, it's going to be pricing me out when it comes to selling these types of options. So for my type of portfolio, I'm going to be voting no. Very curious to see if you guys actually have any type of care what the stock does when it comes to the overall stock price. And then part 3, let's talk about the history of the company, because a lot of people have always commented that GE is not in a great spot to succeed. And 3 years ago, when I originally started this channel, I talked about GE as being in a really bad spot because I thought that they did too many things and they had their fingers in too many businesses and they weren't that good at most of them. And since that point, GE has been very good at cutting off the businesses that have not succeeded. So here's the stock price by year. Things are not looking too good. And for the longest time, when people thought about GE, they thought of appliances, they thought of the light bulbs. But they're actually considered a financial company up until the late 2000s, going into the early 2010s. This article from 2007 shows that they were considered a financial company by the Forbes 500. And then they started getting involved with subprime mortgages around 2004. And if you have any history or education when it comes to the financial crisis that happened in the late 2000s, subprime mortgage was a huge reason why that actually happened. And so in March 2008, the CEO comes out and says that they're on track to meet their expectations for earnings, and that was 18 days before they were actually reported. And then it comes out that they missed their earnings by $700 million, and there's a famous rant by the former CEO, ranting about how he'd get a gun and shoot the CEO if he didn't make what he promised now. So what happened during those 18 days? Because obviously if you're going to be going on to Investor Day and saying that things are on track, the expectations are that you're going to believe the CEO. And so basically what happens is that GE Capital, which is the part of the business that was doing a lot of the mortgages, in the past, they had used their liquidity to sell off assets to make sure that their earnings per share and some of their revenue metrics looked really good. And so that liquidity allowed them to meet Wall Street's expectations. And what happened a couple of days before they reported earnings? You have Bear Stearns going under on March 14th, just a week before their earnings report. And that froze up a lot of the financial company. And it really crippled GE when it came to their capital part of their business. And then that leads to a $139 billion backing from the FDIC in 2008. And then you have the famous story about the CEO calling Warren Buffett in the middle of the night, getting $3 billion of stock purchases from Warren Buffett's Berkshire Hathaway to try to allow them to make it through that tough time. And then they start trying to get back on track. And when you have a company that has a lot of long-term debt, one of the first things that goes is actually the dividend, because it is not seen as being super essential when it comes to the keeping the business afloat. You get to the point where they lower their dividend by 50% in 2017, and then they cut that dividend down to a cent at the end of 2018. And then in an attempt to try to recover their business, they try to get into the fossil fuel industry in 2015, and then they doubled down with a deal with Baker Hughes in 2017, which led to them selling their part of their business just a couple years later. So when I look at this as a company that I believe is a great renewable play, the fact that they have tried to get into fossil fuels, did not succeed, and then have made the switch and have become the world leader when it comes to offshore wind turbines, I think that's very exciting for the company going forward. And so here's what the history of that dividend looks like. You can see that it has been cut significantly, and it's really no longer a part of the business. But when I look at GE overall, yes, you can nitpick some of the history of the company, but I believe that the CEO, Larry Culp, has put the company in a great spot to succeed. I think the selling off of the aviation leasing business was a great plan. I think paying off the debt as soon as possible is a great thing. They've cut off a lot of their businesses that haven't been the most successful in the past, and I'm going to be investing in the company specifically because I think that the growth potential of the renewable part of their business is so exciting. They're expecting the wind turbine industry to grow at a compound annual growth rate of 20% over the next 10 years. And I think that's super exciting. I think the fact that it's a very cheap stock, I think has a lot of upside for newer investors, especially someone like myself that likes selling cash secured puts or selling covered calls. So overall, GE is my favorite renewable stock overall. Yes, you can make the claim that is not a green stock overall, but I think it's the most attractive part of the business overall. So thanks for watching this video. I appreciate all the support, and I will see you in the next video.